Hey, good morning, everybody. Welcome to another daily market report brought to you by Mike York. Today is Thursday, June 23rd. And, we had the big day yesterday with Bernanke's speech after these statements, and the market's really, stock market's really tanked. The bond market, pulled back a little bit, but still went on the plus side. And then today, you'll see coming up as to where interest rates are moving in, where the bond market lies. Um, so basically what came down to is Bernanke didn't really paint a rosy picture of what's going to happen. Basically, he said the plan for the QE2 to finish up in June. Basically, there's going to be revisions. He doesn't have his finger on the pulse of what's creating the slowdown. There'll be revisions obviously for GDP that could lead into 2012. So basically, he just didn't paint a realistic picture, and then so right now we're seeing the stock market tumbling as much as 200, down about 200 right now on the Dow. We have today we had the jobless claims came up at 429, and then they revised last week's up to 420. So still not good on the job news. And then home sales also very disappointing, slightly above expectations. It came up at 319,000 for last month in May. But again, we need to be like three times that amount to be sustainable, or double that, or at least double that to be more sustainable. And for a normal market, that's just horrible numbers. So tomorrow will be the big one. We have GDP and durable goods. So they have those set for pretty bad numbers as already. So we'll kind of see where that may lie, if it goes worse or better. But if we hit it, I would still think markets still may be disappointed and still kind of moving a negative for the equity markets. Of course, that would be good for bonds. So speaking of such, let's go ahead and take a look at where the bond market is and where interest rates are going. All right, so here we got the bond market, and as we saw, we had that nice uptick of about 19 basis points. It was up almost 31 basis points from where we left off the previous day on Tuesday. But we end up closing up about 9 basis points for the day, which is not bad. We still had a good day. But today we have a huge opening gap right here, which I don't believe it will be sustainable. So this could carry it. This could either close today or tomorrow would be my anticipation. As we saw, we had tick either way. We could be plateau here, but 31 basis points is where we jumped up from where we left up here to here. So interest rates are actually moving in a positive manner. I do think we could have a good run here. But again, for us to run up, we do need a nice solid foundation, and this closing gap will need to be, this gap here will need to be closed for a nice solid run for long term. So with all the bad economic news and nothing on the horizon looking too bright, that bodes well better for bonds, and I think we could be sustainable for a while, especially if the government kind of stays and let it kind of run its natural course rather than putting another kind of easing 3 or anything in there, which, as we saw, we should have had interest rates much better, and we could actually see record lows. We could actually see some very good rates out there this year. So interest rates are better today, and you guys have a great day, and catch you tomorrow. And folks, I'm also a loan officer. If you're looking for a mortgage in the state of California, I can also help assist you. You can check out my other websites here at Mike's Daily Market Report and MikeBjork.com, even CaliforniaMortgageTips.com and the Mike's Homebuyer University.com. I have some great resources there. But feel free to give me a call at 310-694-3544. I can do refinances, and I also do purchases. So I can help you get pre-approved to buy that next home here. So thank you, and keep me in mind.